For decades, many Kenyans have been given the same advice: work hard, save money, buy land, build a house. And while these things can create wealth, there is another game happening quietly. A game where money does not just sit, it works, it grows, it compounds. The wealthiest investors in the world understand one simple principle: you don't become wealthy only earning money. You become wealthy by owning assets that continue producing value. A business, a company, a productive investment, a piece of an economy. And today we are going to break down the Kenyan Wealth Blueprint. How ordinary Kenyans can think about building assets through sectors like banking, telecommunication, agriculture, insurance, energy, and investments. Because the biggest question is not how much money do you earn? The biggest question is what assets are you building ownership in? There is a difference between being financially comfortable and being wealthy. A person earning 500,000 Kenya shillings every month but spending everything is not building wealth. And another person earning 100,000 Kenya shillings but consistently buying productive assets may eventually surpass them. Why? Because income pays today, assets pay tomorrow. A salary stops when you stop working, but ownership can continue. A company does not care who owns the shares, it continues producing. That is why investors study companies, not just prices. They study how much does this company own? How much debt does it have? Does it make profits? Does it reward stakeholders? This is where the idea of shareholders funds become important. Now let's understand shareholders funds. Imagine a company owns buildings, equipment, cash, investments, technology. Everything it owns is its asset base. Now remove all the money it owns. What remains? That belongs to shareholders, and that is shareholders funds. So it tells you if everything was sold today and debts were paid, what belongs to the owners? Strong companies usually show growing shareholders funds, growing profit, strong cash flow. A company that grows its equity over many years is usually building value. This is why serious investors don't only ask, what is the share price? They ask, what am I actually buying? Now, banking is the engine of Kenya's economy. Every growing economy needs capital. Businesses needs loan. People needs financing. Trade needs payment. That is why banking remains one of the most important investment sectors. A strong bank usually has a strong balance sheet, large deposits, growing profit, good risk management, but investors must look deeper. A bank can be cheap for a reason. The question is the market ignoring value, or is there a hidden problem? The best investors combine the price, the quality, and growth. The second place is telecommunication, the digital economy. The world has changed. Today, information is power. Digital payments, mobile money, internet technology. Companies controlling these networks are becoming more important. Telecommunication companies are no longer just phone companies. They are becoming financial platforms, data companies, and technology businesses. The future belongs to companies that connect people and move information. The third sector, agriculture. This is the Kenya's hidden giant. Food is one of the oldest businesses in the world. People will always need food, water, energy. Agriculture is not just farming. It includes processing, distribution, export, technology, storage. The opportunity is not only owning farms, it is owning parts of the agricultural value chain. The fourth sector is the insurance and investment. Insurance is about managing risk. As people accumulate cars, homes, businesses, assets, the need for protection grows. Investment companies are also interesting because they own different businesses. They can provide exposure to many sectors. Instead of owning one company, you can sometimes own a company that owns many companies. How much money do you need to start? Many people delay investing because they think, I need millions. You don't. The first goal is not becoming rich. The first goal is building the habit of ownership. A person can start with 5,000 shillings, 10,000 shillings, 50,000 shillings. The amount matters less than consistency, because wealth is usually built through time, discipline, and compounding. So, my final message is the greatest financial shift happens when you stop asking, how can I make more money? And start asking, how can I own more productive assets? Because income creates lifestyle, but ownership creates wealth. The future belongs to the people who understand assets, not just people who earn, study, invest, and own. And let time do the heavy lifting. Don't forget to subscribe, and I'll see you next time.